On October 21st, 2023, after China's stock market experienced a continuous decline, the Shanghai Stock Exchange fell below 3,000 points, and the outflow of foreign funds netted $24 billion or US $3.28 billion in 1 week. It's clear to all sectors that the current outflow of foreign capital from China is accelerating at an alarming rate. On the same day, the official media China News published an article entitled, "Is there a large-scale withdrawal of foreign capital from China?" The article claims, "It is either stupid or evil to scream massive withdrawal of foreign capital from China at the slightest hint of trouble." It was quickly and widely reprinted by major Chinese media and online platforms. Previously, the Beijing government tightened its control over public opinion. Financial media platforms became a key target of the government's crackdown on media outlets that were accused of, among other things, bad-mouthing China's economy. For example, in late June 2023, the China Securities Regulatory Commission opened an investigation into Guangdong Times Media Group for disseminating false information. This media group's publication, Times Weekly, and its finance app, the Times Finance, and the new weekly magazine are quite influential in China. In the so-called Qinglan series of special rectification actions initiated by China's Internet Information Office, a nationwide campaign is carried out to purify the online environment. Financial bloggers, main media online outlets, financial sections of major commercial websites, and leading financial information platforms have become the key targets of this campaign. But even so, it can't stop the general society from discussing the withdrawal of foreign capital and worrying about the downturn of the economy. Thus, on October 21st, the Chinese official media began to launch a large-scale campaign to dispel so-called rumors on the topic of foreign capital withdrawal. On October 24th, the Securities Times website also published an article that reads, "According to a researcher from the Institute of World Economics and Politics of the Chinese Academy of Social Sciences, China's strengths and potential for attracting and utilizing foreign capital aren't diminished." It cited the latest data released by the Ministry of Commerce that from January to September 2023, 37,814 new foreign invested enterprises were set up nationwide, up 32.4% year-on-year. The article concludes that the prediction of foreign investment withdrawing from China doesn't hold up in a macro perspective. Moreover, the article mentions, over the past year or so, the Federal Reserve has continued to raise interest rates from near 0 to 5.25 to 5.5%, the highest level in 22 years. With such a high interest rate lure, it's impossible that the investment of foreign enterprises isn't influenced in the slightest, and that there isn't a bit of fluctuation in the new investment in China. According to the article, foreign investment is market behavior. Since it's a market behavior, it is impossible for it to be stable and unperturbed all the time. It is normal for some foreign companies to lose in the fierce market competition and be forced to withdraw from China, or to choose other places with low costs due to the rise in key factor costs, or to set up more factories in other countries based on supply chain considerations. In other words, it normalizes the departure of foreign investment and puts the blame on the US. One of the most interesting lines in the article is, "How is China's performance in attracting foreign investment? Comparison is the only way to get the truth." In the first 3 quarters of 2022, China's actual use of foreign capital exceeded RMB 1 trillion, reaching RMB 103.76 billion, the highest level in history for the same period. With such a high base, the actual amount of foreign investment used in the first 3 quarters of 2023 dropped by 8.4% compared with the same period last year. But it still amounted to as much as RMB 919.97 billion yuan, which is still quite large in absolute terms, and is also a pretty good achievement in the global context. That's a nice way of putting it, and made it look like China is still doing very well in attracting foreign investment. The article concludes, there is still much potential for growth in attracting foreign investment in the future. The article uses data from 2022, when China was under epidemic control, to compare with this year to illustrate that China's economy is not bad in 2023, a time when the society is normal with COVID-19 restrictions removed. This kind of comparison has no practical significance. In addition, the authenticity of China's official data has been widely questioned by outsiders. So, has there been a massive withdrawal of foreign capital? What is the actual situation? Shanghai has always represented a cosmopolitan city in China and a gathering place for foreign investment. Let's take a look at the latest situation in Shanghai.
听说上海美国学校一座100年名校。
I heard that the American School of Shanghai, a 100-year-old prestigious school, has no one around anymore. I love peace and quiet. I came to see how quiet it really is. The students are really gone, the teachers are gone, and the foreigners are gone. It's a rich neighborhood across the street. Usually it's full of people and traffic. They were all agents and rich people, but now you see only the gate. Is it the same in your part of town?
There is no one at the school anymore, which means many families are gone. Below the comment section of the official article, which said that those who claimed that foreign capital was fleeing were either stupid or evil, many netizens commented on the current state of affairs in Shanghai. One said, "I'm in Shanghai, arguably the city with the largest number of foreigners in all of China, many of whom are working in China. To be honest, there are so few foreigners on the streets now, about 1/10 of what they used to be. Do you think foreign investment has withdrawn?" Another provided an analysis. Coordinates Shanghai. I have 4 points for you to consider. First, there are fewer and fewer opportunities to work for foreign companies. Second, Lujiazui, Shanghai's glitzy financial district. Please go and check out the occupancy rate there. Third, check out the vacancy rate of professional buildings. Fourth, how many foreigners are there in the cosmopolitan city now? Admit it.
早晨8点半，上海浦东机场1号航站楼。
It's 8:30 in the morning at Shanghai Pudong Airport Terminal 1 International Waiting Area. Have a look. There aren't many people. I estimate the crowd to be only about 1/4 or 1/5 of the number of people in Los Angeles Airport. It's probably even less than that. This is what it seems despite it has been half a year since the lift of epidemic restrictions. It's now the end of August. Half a year is gone. The international flights are far from being fully recovered. Traffic is also known as communication. If there is no communication, there is no business. It's directly related to the sharp decline in imports and exports in China. What are foreigners coming here for? To be caught as secret agents? They can't even use Google Maps, Facebook, or Twitter. What's the point of being here? The country has regressed to such a point that it can only get worse. It's not up to us peasants to decide.
这个不是我们平民所能左右的了。
Also, residents in Shanghai can tell from local consumption that the market environment for foreign capital is drastically different. It's understandable that foreign investors would leave. By the same token, the withdrawal of foreign investment has also aggravated the decline of Shanghai as an international metropolis.
This is a commercial street in Baoshan District, Shanghai. It's called Oriental International Trade. You can see right now it's 8:40 p.m. I can't believe that this is the Great Shanghai. I can't believe that there are no people on the street at such an early evening. This is a commercial street. It seems that the real economy is not doing well this year. Basically, the real shops are losing money. Look at these shops. There's no one inside. The main thing is that there's no one on the street. Look at the neighborhood. It's parked full of vehicles, but there's no one on the street. The only exception is this pet hospital. There are still a few people inside. It looks depressing. I can't believe that this is Shanghai. These restaurants are empty. There are no people. It's true that there are fewer people in Shanghai this year than previous years. You barely see people in such a commercial boulevard. Plus, it's around 8 p.m., around dinner time. I've been walking on the street for a while now, and I see very few people. Is it possible that people nowadays have changed their spending habits? There's no one inside the shops. Let me show you the inside. They're all empty. No one. Shanghai is supposed to be a cosmopolitan city.
If the Chinese media keeps clarifying one thing, it's most likely that's what's taking place. Not only Shanghai, but other major cities are feeling the chill of foreign investment pulling out. In the comment section of the article, the following scenes were cited by netizens. One said, "Heaven knows, earth knows, you know and I know, but the authorities don't know. All I know is that most of Foxconn in Zhengzhou is gone, 2 Mercedes-Benz factories in Beijing have shut down, and a Japanese car brand in Guangzhou has closed down. Many of the world's leading companies have relocated to Southeast Asian countries such as Vietnam and India." Someone else predicted this. "Capital flee is a better word. Tesla and Apple are next in line." One netizen mocked the tone of Chinese officials, saying, "Is foreign investment so important? If you want to leave, just leave. After all, we still have good friends such as Afghanistan, Iran, North Korea, Africa, and other various kinds of brothers. All of them are first-class civilized countries in the world. Similar people are attracted to each other, so we are bound to grow stronger." Another wrote, "China has been highly dependent on Europe and the US for its economic development for the past 20 years. I don't know if foreign capital is leaving or not. All I know is that the Pearl River Delta used to be full of Taiwanese and Hong Kong businessmen. But now you can't even find a pair of them. Once it was the world's busiest trading port and ships needed to queue up to enter and exit. Now you can't see 1 or 2 ships in a day. It's a phenomenon I've never seen in the past 20 years. In the previous couple of years, if it weren't for live streaming platforms such as TikTok and Douyin, which have taken in most of the unemployed as online beggars to make ends meet, it's not hard to imagine that there would be many unemployed people wandering on the streets." The employment situation in China is indeed as described by the netizen. Live streaming platforms are taking in many unemployed people. A Chinese netizen summed up the employment situation in China. "The leading heavy industry is barbecue, and the leading light industry is live streaming." Here is a scene in a city in Guangxi province, an underdeveloped province in southwestern China. Not only the common hosts, but also a large number of web celebrities or entertainment stars, their main job is to promote products via live streaming. It's known as live streaming shopping. The Chinese official media has carefully packaged live streaming, especially live shopping, as a new type of light industry, making it the highlight of China's economy in both domestic and foreign propaganda. According to the state TV station, China's online retail sector has experienced rapid growth in the first 3 quarters in 2023, playing a significant role in vitalizing the consumer market and driving consumer demand, according to the latest data from the National Bureau of Statistics.
现在我们村里的物流特别方便，刚买的智能电饭煲2天就送到家了。
The innovative business models in online shopping have further stimulated the potential of consumption and created new space and momentum for expanding domestic demand, which helps facilitate the circulation of economic supply and demand while accelerating economic recovery.
For China's official media, it's absolutely forbidden to make pessimistic comments such as the massive withdrawal of foreign capital and economic recession. Their more pressing task is to convince the Chinese people that the economy is recovering and has a bright future. The state news agency Xinhua published an article on October 20th. China's economy continues to recover, overall upward trend. The commentary said, "Judging from the indicators of industry, service sector, consumption, and investment, the economy has shown a continuous momentum of recovery and improvement." Of course, the CCP knows that there will be many people who don't believe the upbeat message. Many Chinese are voting with their feet by leaving China, especially the middle class and above, who are rich and wealthy and don't intend to tie themselves to the CCP for the next few decades. This group of people is trying to find a way to escape when foreign capital is fleeing the country. Look, this is the visa queue at the US consulate in Guangzhou on October 18th, 2023. A few years ago, it was already complicated for Chinese people to leave the country. Currently, it's become more difficult not only for civil servants and teachers, but also for ordinary people to go and renew their passports. For example, teachers have to submit their passports. Theoretically, they can get their passports to go abroad after the approval from their leaders and the approval of their family background. After the epidemic, the CCP reopened the borders, but restrictions on civil servants and employees of state-owned related enterprises in traveling abroad have become increasingly stringent. Reuters quoted a dozen current and former civil servants and state-owned enterprise employees on October 17th as saying that the government expanded restrictions on them from 2021. Including a ban on foreign travel, stricter limits on the frequency and duration of trips, a burdensome approval process, and confidential training before departure. 2 employees who have been working in the banking industry for nearly 20 years revealed that lower-level employees at Beijing and Shanghai branches of China Construction Bank are only allowed to travel abroad once a year for personal reasons and for a maximum of 12 days. Both employees only found out about these new restrictions when they applied for leave earlier this year. While senior officials and leaders of state-owned enterprises might have the risk of leaking state secrets due to their access to information, ordinary civil servants aren't usually concerned with this kind of issue. Nowadays, the CCP has passports of civil servants taken away without discretion. It shows a lack of confidence in itself, and it has no trust in anyone, even people within the system. As for ordinary Chinese who have no substantial wealth and with little valuable information for the enemy, restricting their travels may be related to the general environment. That is, the CCP has chosen to decouple itself from the rest of the world. Moreover, every citizen needs to exchange foreign currency when traveling abroad, and Beijing is not happy that this money is being spent abroad, as China's foreign exchange reserves have declined dramatically.